Good morning, trade pros. Welcome to the morning market update for the 12th of May. And I hope you guys are doing well. I can't believe it's May 12th already. All right. I'm wearing my STFR sell the you know what rip shirt. And I don't know if that's what we're going to be doing today. So the shirt doesn't predict the strategy. The strategy predicts the shirt. I know a lot of you have been asking about this gear and when you guys could get some Trade Pro swag. I was this close to launching the new store, and then coronavirus happened. I don't want to have a delay in shipping and all that stuff. It takes an incredibly long time for shipping to go out. So be patient. It's coming as soon as we get back to a little bit more of a normal scenario. Today we got to talk about a few things. All right. Latest on coronavirus. Top health officials in Donald Trump's administration will be testifying today. All right, in front of the Senate committee. Dr. Anthony Fauci has already announced the context of what he's going to talk about in the Senate committee hearing. So what he basically said, he sent it to a journalist, and then she tweeted it. She said, "The major message that I wish to convey to the Senate tomorrow is the danger of trying to open the country prematurely." So that's what he's going to testify about. All right. Speaking of prematurely, in Wuhan, China, all right, where the virus was first detected, from the virology lab right next to the meat market. What could go wrong? There were 6 new cases of infection that were confirmed over the weekend. And the interesting part about that is they've been reporting 0 infections for more than a month. Now, that doesn't mean that's actually the case, but it's been reported that there were no infections for more than a month. Now they're reporting at least a couple, 6 of them. So forget about the numbers. You can't really trust the numbers. But what you can realize is that there is a little bit of a second wave starting to happen in China. And what they're going to do in Wuhan is issue 11 million tests. They're going to test everyone in the province. You'll be very interested to see what that looks like, because China is ahead of the curve because the virus started there. We could look to China as a model of not sharing the information, but a model of what happens with the virus. Okay, forget about the numbers. Numbers are meaningless. All that matters is, will there be an infection rate, a second wave? Things are starting to reopen. I'm seeing some pictures surface of the tram in the UK subway system, and we're seeing that people are getting closer. They're violating social distancing rules. Our leaders in Canada as well, the provincial leaders, are saying, stay away from people, but blah blah blah. But when interviewed, they're having get-togethers with their family. So it's getting to the point where it's time. All right, it's time to start going back. And what happens, who knows? All right, the market has bottomed out. It's relentlessly moving higher. There's absolutely no sellers, and there's a lot of buying on very low volume. Let me give you a case in point. Overnight low, we trade down to 28.94, then we rip back up to 29.35. All right, that's almost 50 points that happened overnight on a mere 300,000 contracts of volume. There's a lot of movement on low price. This is the most hated rally in the history of stock markets. All right. Interestingly enough, in this rally, it's characterized by more retail public getting into the market than institutional money. Institutional money isn't getting more long. They're already net long because that's their job, but they aren't adding on these dips. And the reports are showing that institutional money isn't flowing in. So it's interesting. It's a hated rally, okay? But if you look at it, there's 2 ways. We're kind of split right now in the moment with this coronavirus, and I hate splitting people. I want to be together. All right, I want us all to be united. That's how humanity is strong. But we're split into 2 camps. People who think this reopening is going to lead to disaster and who look for the negative news, and people who are more optimistic who think, hey, we're going to get through this. All right, and it's more of an optimistic camp. I fall in the second one personally, but I understand, and I like to network and talk with people on both sides so I can understand the full picture. But here's what I think. Look, I think this coronavirus thing, it's terrible, but I think we're going to get over it. Think about this. If one virus killed the entire population, we wouldn't be here in the year, 2020. That's 2020 years of overcoming things, and at a most technologically advanced, medical advanced industry ever in the history of humanity. We're going to get through this. Okay, we're going to get through it. The question is, when and how will things pick up? So we're looking at a lot of information on the rebound. That's what's important. How will the economy restart? And depending on how it restarts, will it cause a second wave of virus infections? And if it does, will there be a more harsh lockdown? That's the big question. We're over the fact that it's happened. Markets are at least. All right. This morning, the central bank is kicking off a very historic operation. It's called the Secondary Market Corporate Credit Facility, SMCCF, and they're going to begin buying ETFs today in corporate debt. So there's going to be some junk bonds in there as well, high yielding, higher risk debt instruments. But they are going to begin buying ETFs through BlackRock. BlackRock is going to be their dealer member, and BlackRock is going to stand to earn $15 million from the Fed. All right. Other Fed facility designed to buy debt directly from the issuer rather than buying it on the public or secondary market. The Primary Market Corporate Credit Facility, or PMCCF, is set to launch in the near future as well. So here's the Fed literally buying in the market. Okay, you could be competing with orders from the Federal Reserve. You're trying to sell ETFs that they're after to buy. It's an interesting situation. The last 4 months has been historic in so many ways. It would take me a whole webinar to cover it. All right, at 8:30 in the morning, Senate majority. Oh wait, we're not there yet. We got to talk about this first. Let me see some comments really quickly because we're almost done. It's a quicker one today. Yeah, Lee, I agree. There's going to be a spread, and I think there's going to be a second wave, undoubtedly, with more people walking around and people who are asymptomatic who have it and don't show any symptoms. And it's going to happen. The question is there less infections because there's a little bit more immunity? We don't know. All right. By the time we have answers to the most important questions, it's not going to be very meaningful to us anymore. We'll be back to watching cat videos on Facebook, all right, and not really caring. So, it's going to take time for this info to come in, and that's the problem. It's kind of like trading. The most important information we don't have yet, and you have to get used to working in that environment. That's why, to us, it's second nature as traders. All right, this morning, there's a wait-and-see approach for more stimulus. So there's been some calls for another stimulus package as the economy reopens to give it a boost, if you will. All right. The House may vote for this on Friday, so keep your ears out on that. Treasury Secretary Steve Mnuchin said that it would be prudent to wait a few weeks before deciding on further measures to give the current stimulus some time to have an effect. And I agree. So much money has been created and circulated, and people have been at home. They can't really take advantage of it. So before a new stimulus measure comes out, let's let the current one work. But I think this is more of a sentiment build. Let's send you off back in the workforce. Here's some more money. Just remember that and get in there and have confidence the economy will rebound. I don't know if it works that way. All right. I don't know about you guys, but the average everyday person hasn't touched much of that stimulus money. But hey, here's to the wealth effect. Hopefully trickles down. 8:30 in the morning, Senate Minority Leader Chuck Schumer says the House Democrats are ready to unveil a large and bold stimulus plan. So there wasn't really much hope for something coming out on Friday. There was rumors that at 8:30 that gets dropped on news wires, and you think, hey, you know what? Something's coming. Market reacted slightly favorably to it, but that's not news either. At this point, so much craziness has happened. Not much is news. What we really need, the key piece of data that is missing is what does a restart of the economy look like, and what impact will it have? And will people be back to their regular spending habits just like that? I personally think we'll get back to normal. We'll actually surpass how we came into this situation, but it'll take longer than expected. I'm seeing probably 6 months to 9 months at least for all the economic indicators to correct and surpass pre-corona highs, right? At least. Some people are saying decade. It's a little intense, right? With a couple $1 trillion floating, it's going to supercharge the curve a bit. All right, in today's market, Japan's down, Hong Kong's down, China's down, India's down as well. Slight red across the board. Pretty nasty print of PPI in China, producer pricing index. It's weighing Asian markets down slightly. In Europe at midday, London is flat, Paris is flat, Frankfurt's flat as well. U.S. futures, same deal. They have rallied above their prior day close at the 18 quarters. Watch that 29.45 to 50 level on S&P 500 futures. Above there, you can buy some pullbacks. Below there, we're trading a pretty nice and tight range. There could be a short opportunity, low to mid 40s, above the 50 long opportunity. All right, that's what we're going to be waiting for. Crude oil is up 5.6%, gold's up 0.5%, and Bitcoin is flat. Everyone's waiting for this halving that's going to be occurring. I think it's actually today. And consumer price index was a big report this morning. We're seeing deflationary readings on a month-to-month basis on the core numbers. The core numbers strip out energy costs, and it's minus 0.4 print versus minus 0.2 expected. Okay, the coronavirus is disinflationary, or if it gets to zero, it's deflationary. That's the difference. Disinflation is a slowing down of inflation readings. Anything below zero print is deflation. And the reason that's happening is, these companies stock their inventory before coronavirus as if things are normal, and then demand just got wiped out. So you're going to have to clear some of that inventory, and you're going to probably have to take lower prices at some point. Okay, and it's very deflationary. Even though the Fed's dumped so much money and promised so much money at the market, we're still seeing disinflation, which I find interesting. Core CPI is down 0.4%. All right. The overall headline CPI is down even more, minus 0.8. But year over year, we remain at 0.3. Okay. Versus a prior reading of 1.5%. So we've lost a lot of inflation, but we haven't hit deflationary conditions yet. Deflation and disinflation is actually good for consumers. It means when we restart the economy, you're going to have cheaper prices to pay for things, which means your spending power increases. It's terrible for debt holders. This is why the Federal Reserve, their biggest nightmare, the reason they're sweating bullets when they sleep at night, is deflation, because it makes your debt more expensive. The United States government has got a lot of debt, so you don't want to see deflation as a government, but it's actually not bad for a consumer. In the short term. In the long term, it is kind of bad for the consumer too. All right, this morning, 10 a.m., we have Fed's Harker speaking. 9 a.m., we have Fed's Bullard speaking at the moment. Fed's Harker speaking at 10. Fed's Randall also speaking at 10. 1 p.m., results of a $32 billion note auction. 2 p.m., Treasury budget. And at 5 p.m., Fed's Messer speaks. A lot of Fed speakers. Keep your ear out on the news squawk. These days, you have to be trading with a live news feed. If you're not, it's going to be more tough. I think the news feed's paid for itself multiple times over. In any given month, actually. It's been very opportunistic. I love you guys. You be safe out there. Let me look at some of the comments. 6 to 9 months, Mohammed, not 69 months. 69 months would be an oddly peculiar guess for long term. Yeah, around 69.268. But 6 to 9 months for a full recovery of consumption. That's what I'm seeing. I think jobs come back. I'm an optimist, and it's worked for me. So let's do it. Let's get it done. TE, this is interesting. It said, I went to get a new purchase steam cleaner at Lowe's yesterday. It took an hour for a pickup. You know what, TE, I agree with you. Like, if you're out there looking to consume something right now, it's impossible to get. It's almost like an artificial clog of demand. And you know what happens when you have a floodgate? You close it and the pressure builds till it opens and everyone flocks in. I moved into a new home with my wife and we're trying to buy stuff, and it's like a wait period 6 weeks. Some websites are like out of stock and no date for restocking. We have no clue. It's twofold. Supply chains are a little bit interrupted at this time, and more importantly, demand's dead. All right, but it is building. I think demand right now is understated. I think it's greater than anyone thinks. All right, I talked to my mortgage guy. He's like, look, I got a backlog of applications, and no lender's willing to give credit at the moment. I think when things resume and people kind of loosen the shackles, it's going to explode higher. And there's a bunch of consumption waiting on the sidelines. All right. That's just my take from my personal experience. I love you guys. You guys have a great rest of your day. We're going to have to open up the trading room. Appreciate you, YouTube. Be safe. Manage risk, trade pro. Watch those 45 to 50 levels on the SPOOs, the S&P 500 futures. And we'll catch you tomorrow. Ciao. Have a great day. Bye. Steven, let me put you on here. We'll talk about oil, set up some key levels, and then we'll do the same on equities. I got a good idea. I'll give you my 2 trade setups I'm waiting for. And then we just got to be patient till one of them hits. Let me get in here, find you, and share the screen with you. There you go. You're on panelist mode. Stop screen share. YouTube, you're still here. Take care. Have a great day. Love you guys.